Good afternoon, guys, and welcome to this price action debrief. It is Tuesday, the 7th of February. Hope everyone's had a good day trading, and let's get straight into it. Today, the price action I'm going to be looking at is a spoofing and flipping sort of trade combined with large orders. The actual trade is a sort of hit and run type of play, but like I said, I'll kind of, these all these type of strategies and execution plays kind of combined can all, merge into one. So as we get into it, I'll sort of explain how I see it and how I kind of turn not so good trading into all right trading, and how you can sometimes make a bad trade sort of work out for you. But anyway, let's get into the sort of technical setup of how I approach this trade. First of all, you have a daily profile on the left, combined with a 60-minute bund on the right. And as you guys can see, we have this ledge set up on the profile, which we now have, we've broken out of. Basically, the setup of the day is we opened at the top end of Monday's range, pushed higher, and we pushed high, and we came up to a really good level here, and rolled back over again. And sort of as we started trading back underneath Monday's high, we're sort of looking for an accumulation trade in terms of looking for further downside, looking for this poorly structured value area and profile to be filled out, to be traded through. So that's the understanding of the first initial trade, in terms of you're looking for short side, you're looking for initiative shorts in that sense. But on the right hand side, as you can see here, we've got this really steep Bollinger Band, and just the way that I combine the two things together, guys, like I was saying, as much as this initial trade is a really good one, the sort of the short, that is the technically right trade. That is the right trade to be taking in this time. But you're looking for, and as I'll get into, when I show you a lower time frame chart, you're looking for a potential exhaustion and potential bounce reversion back to this really accepted value area traded up here. We still have VPOC up here. We haven't shifted any sort of any sense of real value lower down. The volume traded out was relatively low. That it's, as much as this is somewhat of an aggressive move, it's a potentially overstretched move. And just how I'm going to show you guys how I sort of initially maximize the short side in terms of further after, say, being short, and then looking to, say, make the most out of other opportunities that come about. So basically, like I said to you guys, it's a spoofing and flipping trade combined with some large orders. The pattern type is a sort of mean reversion trade in terms of, if I just quickly go back to the profile, I mean, something that I got told and sort of keep in the back of my mind is how these ledges work, in terms of when you have a ledge like this, which comes in at 40s, it's almost as if it's like a magnet, in terms of that price, genuinely tends to revert back to it. So as much as it's a great trade to be playing on the short side, and that initial move down was a really good one. You're also you kind of as much as they're technically set up to be bearish and have further downside, when you start seeing other indicators such as your 60-minute, such as the profile lining up, you may look for potential profit taking and stuff like that. But like I said, it kind of acts as a magnet. So rarely do you ever see ledges like this just never get retested, or at least traded out at some point. So like I said, it's a sort of mean reversion strategy. You have value up higher. You have all the volume still traded up higher in that profile. I haven't filled it in here, but basically the trading strategy that we're going to be using is sort of a distribution strategy, in terms of you're not sort of clipping full size and sort of being really I mean, you're going to be tight with risk, but you're not going to have sort of clear-cut risk. It's going to be kind of dynamic, and it's going to be kind of, you have to sort of scale in, scale out, which I do poorly at times, but also it allows me to be nimble and sort of reevaluate price action, because like I said, in terms of the technicals of it, it's set up very bearishly, and as much as I was short into this move, I don't then want to be getting really big on a fade type play. I'm kind of wanted to be, I want to manage my risk, and I want to be cautious as to fading really strong, strong technicals. I don't want to be fading what the market's telling me. The ladder and market environment is somewhat. I mean, you can be traded out in this low velocity, low auctioning speed market, but it can also be sort of high velocity, high volume. If anything, it works a lot better in high volume, high velocity, especially the steep Bollinger Bands. When you have really steep Bollinger Bands and then reactions off them in that really high speed two-way trade market, the trade kind of pans out a lot cleaner, and like it doesn't give you this sort of two-way trade which you're about to see in terms of as to why I didn't necessarily keep hanging on to the trade and always looking for further upside. Although I said you're kind of loose with the risk, I mean, as I'll explain in the ladder, you kind of have a 3 to 5 tick stop risk management, and then you're looking for say 5 to 10 ticks in terms of your initial target is kind of. Like when I'm going into this trade, my initial target is some sort of at least sort of back up and sort of look to retest this ledge. I'm not saying the single prints have to be filled, but in terms, this could revert back up and then roll over again, and then we start printing new prints down here, and then we sort of move away. But at least a fair bounce in terms of like I said, you don't see these ledges often not just retested. So I mean, anything between 5 to 10 ticks, depending on price action, and depending on the levels that are sort of on the levels that are nearby surrounding the surrounding market. So basically, here we have a 1 minute. This is a 1 minute chart of the Bund, and the structure that we have in here. This is the ledge breakout here, coming in here. You see how we've tested it numerous times, and then we've rolled through it. Coming in, these are the 40s levels in here, and as you see, as we roll through this move here is all stops being just blown out. We just traded straight through it, and it's kind of an exhaustion sort of pattern in terms of we blip down, and we came into this area which I've been eyeing up here. It was a sort of swing area from the day before. This was a 30 to 29 area. Just to bear in mind when you watch the ladder, keep an eye on the 30s to 29s there, and this ties in with the Bollinger Band. The Bollinger Band is coming in below this sort of candle in terms of the first test down, first bounce. And and ideally, the way I kind of like to trade these Bollinger Bands is I won't be sort of bid at the price or offered at the price. I'll see it come down and test it, and in a perfect world like you have here, you get the fake out of this area. So you're looking for a fake out in here, and then back up. So my initial long in this market was actually in here. I got long in here, and I was trying to scale out. I scaled out of some. I scaled out of some in here, and I didn't get filled on my other sides. So this is why I'm going to sort of explain to you how I then go about trading the price action in this area. This is where the ladder is going to be predominantly focused on, in this region here. And as you can just see from looking at a price chart, you can see the sort of the flipping type of price action, the sort of not very directional consolidation type of pattern, which is also why, like I said, you need to be cautious of this trade, because technically this is set up very bearishly, both on a daily and the sort of the lower time frame. You don't. This is a sort of tight risk, tight, not huge reward. Bearing in mind that this is all stops being taken out in here, this area in here. You sort of when you don't. There's got sort of warning signs in terms of how this trade might not pan out. When you start to see, when we had this rollover through, we had the clean roll through the 29s, 30s area, and then we start to consolidate underneath. That's when you're sort of thinking, right, the single prints may not be filled. We couldn't really test any higher than these were 34s in here. We couldn't test any higher than 34s, and then we came straight back down. But like I say, guys, let me explain it to you how I traded on the price ladder, and how I could have executed better, as well as some of the things I did all right. So basically, as you can see here, we've taken out the 30s to 29s area. We're now trading below it. Bear in mind, we're sort of trading into the Bollinger Band now. So the Bollinger Band came in around about. Oh, excuse me. The Bollinger Band came in at around about. Came in at around about 30s area, 30s, 29s. and now we're trading well into it. Okay, so bear in mind this is still sort of, you have a number of factors lining up to you in terms of this trade and how it should pan out and how you should sort of manage risk. As much as it's technically bearish still, you can still position yourself accordingly. If the video is actually playing. So yeah, okay. Excuse me guys, sorry about that. Right. So as you see, you're going to start to see sort of, as we trade down at these lower prices, how we start to auction and how we start to flip in this area. But it's not necessary, there's no real initiative and there's no real decisiveness from either side. It's kind of, this low volume trade, back and forth, the clips are sort of, we're just rotating in this area, we're just kind of accumulating volume in here and just distributing. Bearing in mind, if this was to have no Bollinger Band sort of, and not the type of levels to lean on, I mean, I would totally be trading this in a different sense. I would not be looking for the sort of bounce or any sort of mean reversion. I'd be, trying to position myself for continuation trade. But as it stands, I'm still trying to play the long side. I'm still, my stop at the moment is kind of price action dependent. So I'm constantly, I'm looking how we trade it and to see when the price action picks up and when it starts to change. It's still low volume coming through the market. There's nothing really trading. There's no real decisiveness. We're still just flipping in this area here, and it's on this spike here, this red candle here, where the price action starts to step in. Where I'll give you a clean sort of entry as to how, if you were still long up in here and you're trying to work positions and you're trying to get, a decent average price, how you can sort of, be decisive and then have real firm risk. So like I said, we've kind of had this price flip back up to the 27s, and again, nothing's really clipping, nothing's really lifting. There's no one, there's no intent to buy at the market right now. There's no one sort of, just as much as there's no real intent to sell at market. Small, slightly bigger clips coming through now. 143 lots trading that market. And just watch how it now gets flipped back down. There's a genuine size being clipped through here in terms of, in being clipped through at market. And it's just still rotating. There's no, as much, you're seeing this on and off size and clip. So after he's just flipped it down from 22s back up to 27s, he's still in this area, just distributing in this region. Just bear in mind, so like I say, you sort of the 30s to 29s areas is the key sort of, if we can get back above through 30s, 29s, you should see a sort of, the shorts sort of pay up and that reversion back. So just bear in mind that whilst in this trade, you're sort of leaning on the fact that you've got short-term signals to potentially fade this move, whereas long-term, technically, this is sort of looking up very bearish, and you're trying to, and you're being very cautious to not getting too attached to a position which could quite easily go offside. Let me just, hopefully this will speed up a bit. So as you see, we're still flipping in this area. No one's really, there's no, we haven't really gone bid 27s and tested these 28s, 29s area. We're still sort of, there's someone happily reloading, absorbing 27s and then clipping back down, flipping it back down to these lower prices and just sort of accumulating still in here. Notice any size that does get lifted, it's hit straight back down. Like again, there's no real initiative up here. You see, I'm trying to look into as to where I'm going to scale out. I'm expecting that move up higher. I'm not, how I'm still playing it. I'm expecting some sort of shorts paying up. That there should be, if this move is to happen, it's quite a flush move. This is the type of price action that I didn't like to see, guys. Like I said, when it's a high volume market and it's auctioning two-way really nicely and there's clear sort of buyers and sellers interacting, you shouldn't really see this two-way chop. You have the steep Bollinger Band, coming in, and price will sort of, you have a real clean sort of reaction from price, and it will just kind of bounce, like, obviously as much as it's a longs sort of, taking initiative. It's shorts paying up. It's the algorithms. You know, when algos look at taking profit, they're looking at these Bollinger Bands. They're looking at these areas. Whereas at the moment, the type of price action we're seeing is kind of, we have this. We're having this test of a Bollinger Band, and then we're having the sideways chop. We're having this sort of price action, which it's just not what you want to see. So right, as you see, we've flipped the price down again, and now we're starting to trade back towards 22s. And I just want to show you guys now how I manage my clip in here. Not to say that I did it very well, but like I said, I'm trying to, you know, bearing in mind I'm relying on the fact that we have sort of, you know, the higher time frame technicals. Just watch here as we start flipping it back up again. You know, no size really traded 21s, and he's just taking it bid 22s. It's just, and then now the clips are dying down again. Hits down 22s, hits the low here. And just watch on the offer, guys. Watch as how the order book starts to change. I'll pause it for you when it comes up. Just watch. Notice the size, and notice the clip back up. Look how many lots traded here at the low. 1,000 lots traded at the low. Notice the size still coming in at lower prices, and see here, see on the book how we've just picked up how this 1,300 lots now just come into market in here at 23s. So when this guy comes in now, I've seen size clip the low. I've seen, you know, someone's looking for liquidity, someone's trying to get filled, someone's trying to get a position away. So when you see something like that, it gives you, you know, especially when you've worked a position like you have now, you're offside, and it's you know, this isn't an easy trade to hold on to. It's a really painful trade when it starts trading like this. Not to say you can't work out of it, but you need to have some sort of clear defined risk when you start to see this. And now you have some sort of clear defined risk. When you see size like this on the book come down after seeing how aggressively it's been flipped down and back up, you know, when this size clipping the low, especially when you have the Bollinger Band to lean on, you have the levels to lean on. Watch how it trades back up through here and how I sort of react to it accordingly. So let's just restart playing again. Notice how the clip now starts to die. You had that big size and 143 lots take 22 bid. Notice that it's 1,000 lots still sitting here. Notice how the size is trading through now. You have 300 lots trading through at 22s, and then the reload. Notice the reload, guys. And then the size here, 127 lots just took 23 bid. He's flipped it back up, and now I'm sitting in front of this guy. I'm saying I want to get in front of this guy. I want to, you know, whoever's sort of spoofed this market down, and now he's got his fill, he's going to sort of flip it back up again. And your stop can be tight, guys. Really, really tight. I mean, you can have 21s, 20s. You know, you don't really, if this flip is going to pan out as it should, you should see it sort of go bid up 22s, 24s, 25s quite quickly, and then you sort of target again back up to 29s, 28s. So let's just see how it pans out now. So as you see, the guy at 23s that I was offered there and got lifted, he was spoofing the market lower down, and you'll stop. You know, you're paying attention to 23s. The size. Look at the clips now on the sell side. You know, they're sort of they're decreasing. The buy clips, you know, bigger and bigger now. There's less intent to sort of clip at lower prices. The 23s are sort of, you have this firm bid and constant lifting. 100 lots taking the market bid now, 200 lots taking the market bid. And now we have more size turn up on the offer here. 894 lots turn up on the offer. 188 lots clip him, and he goes bidding on it. It's someone, you know, he's flipped it down and he's flipped it back and forth, and now he's got his fill and he's moved it back up. You can see him working the other side of the book here at 20s. He's, you know, he's distributing in this area, and now that he's got his fill, he can flip back up again. See, 327 lots. The whole book here is kind of, it's not real in that sense. You know, you're seeing genuine offers getting pulled. You're seeing this guy keep flipping, and you know, and just sort of, like, you can use these guys as sort of targets. You see what I mean? So you should see, again, 200 lots trade through, the offer gets pulled. Once you start to see it rotate back up, anyone who's front running down here is really panicking. 23s, 22s, anyone front running down here, seeing all this size being clipped into the lows, where are they going to start paying up? They're going to start paying up through the size in the book. They're not going to hang on to it any lower than this. As that happens, the upside squeeze is sort of emphasized. You know, you get a really clean move up, and this sort of, you know, as you see, this was, as you guys can see now on the price section on the 1 minute, this is, you know, in here, that was all what sort of took place in here. And as you know, just notice how we trade up, sort of again, like my target still on this trade is you know, I mean, at least a retest of this area, I suppose. I mean, look to take at these highs, or, once this is a sort of telltale sign as to when we roll over again. As to, I'll explain as you see, but let's notice the bid now. It's just lifting on nothing really, and the offer's just is thin. There's nothing really trading either side. 200 lots trading to 28s, 300 and notice the reload. Notice the reload and clip into 29s. See, then I get my first fill, and now sort of like I say, I'm looking for targets back up to 34s, maybe sort of at least sort of retest this LVN area, try and get back to some sort of value, some sort of balance. But then, like I say, once you start to see it tire out, you see this is sort of similar now to the exhaustion pattern that I explained yesterday. Notice how it starts to tire out here. Notice the clips coming back down though. You see, there's size coming in at 29s. There's intent to sell back at these areas again. The 30s to 29 area, guys. This is sort of that block you need to be wary of, and this, like I say, when your technicals line up like they do, the fade trade can only be a fade trade in terms that it's a short-term trade. You're not kind of the technicals are going to sort of pan out as they are, as long as the price action allows it. The price action here, and notice how it's gone so heavy on the offer. 260 lots, clip back down. Size being clipped back down to 27s. Notice the reload. This is not the sort of price action you want to see. And notice the bid now getting pulled. The guy who's just flipped it back down to 21s up to 30s. He's just doing the same thing. He's accumulating, and he's sort of just distributing this whole area. Don't get me wrong. You can sort of you can trade it, and it's quite a clean, and there can be clean setups in it, but your original stop was here at 23s. The guy that flipped it up and you hit through, you lifted through, sorry, you don't want to see price back below there, you know what I mean, guys? So like I said, I go on to scratch this remaining one lot here, and yeah, just this price action again, it goes back to sort of distributing type play, and yeah, it's not very clean. It's not what you want to see in this type of trade, guys. But other than that, that is all I really have for you guys today. Just a short little setup. It's like I say, this can be applied in all sorts of markets. That type of hitting through spoofs, hitting through large orders. But it can be applied in all markets. But this isn't as much a prime setup in terms of what not to see in this setup. It's almost good to know. You need to know when there's red flags being shown up, when there's not, when things, as much as you're trying to work a bad position and you're trying to stick to the game plan of your initial idea, you need to know when, right, this isn't gonna work in here, sort of thing. So like I said, we go on to scratch the trade, and this is just further on.